In today's video, I'll be showing you a very simple trading strategy that you can apply right now and become profitable in the forex market. And this strategy is all around the R.I.L.T trading strategy, Raba Institution Liquidity Trap trading strategy. Now, this strategy is all about you understanding areas where there will be fake order blocks, fake POI, and fake support and resistance on supply and demand zones. Okay, where other traders will be looking at shorting or longing from that position, you on the other hand will be looking at that target, the R.I.L.T target. And to apply this, you need the forex calendar and then your charting software. If you have not seen that video, check the recent videos I made. You are going to see that video on R.I.L.T, and then you watch it and understand how to trade it. I showed you how to trade method 1. If you have not seen it, try and watch it and then come back to this video. Now, in this method 2, we are going to look for a way to trade the sweep of what? R.I.L.T. Now, by the way, if you are coming here for the first time and you don't understand all of this, what I'm saying is this. The market prints patterns, okay, recognizable patterns that entices and induces traders to take buy or sell position. And one of those methods are simply smart money concept chalk. Okay, we have a chalk here with the supply zone here and the demand zone here. And then what most smart money concept trader will be doing is looking for a way to short this market the moment it gets to what? The supply zone or the order block in here, or any form of what? POI in here, before they move the price to the downside. This is a good setup for any smart money trader, including myself. But I've realized over the years that not all of this setup works out. Okay, there are some that can easily be spot, and one of them is using the R.I.L.T line. Okay, the R.I.L.T line are simply highs and lows that have been produced during high impact news. Now, what are high impact news? These are news releases like non-farm payroll, like CPI, like PMI report, and so on. The interest rate decisions of various central banks. Okay. Now, on the day of that release, during that hour, you look for the high and low that was produced during that time. If any of this high and low has not been taken, mark it out as what? As R.I.L.T. Because when price comes back there in the future, this zone, whatever is being formed here, will not hold. Price will sweep that R.I.L.T, and either it continues going up or comes down. So now, in method 2, we want to be trading R.I.L.T sweep. Okay, a sweep of this, and then we move in our intended direction. While others will be entering here with stop loss above. Okay, you simply wait for that R.I.L.T to be taken. And these are the simple rules. Okay. Now, rule number 1, you identify your R.I.L.T. Identify your R.I.L.T, you need to have a forex factory. Okay, to understand the days where news will be released, and then your trading software. Okay. So without wasting time, I will go through all of this. Once you identify the R.I.L.T, you draw a line there. Okay, and you can label it R.I.L.T. Okay. What I do is I use a ray tool. I label it R.I.L.T, and I simply place it there. Okay, and I leave it on my chart. So when price comes in the future, I'll be looking at what? Trading it. Okay, in form of a sweep. I'll wait for price to sweep this high before going lower. Number 2, wait for price to sweep the R.I.L.T. Okay, that is it. Number 3, look for a change of what? Order flow. Now, because price has just taken this doesn't mean you should then sell immediately. No. Sometimes price will take this R.I.L.T and then start heading up. In order not to be caught in such a position, you have to wait for what? A change of order flow in a lower time frame. Okay, meaning you are going to look for this same pattern again. Okay, but this time around it will be a valid pattern to trade up from. Look for this same pattern again. Okay, then you enter. Once you see that change of order flow, you enter at the what? At the R.I.L.T line. Okay, this is the R.I.L.T line. When price return back, what I mean is this. In the lower time frame, once you see your chalk, when price comes back to this RILT, okay, you can enter stop loss above and then you take your trade to the downside. Alright, so where are you going to take your profit? Your profit here is simply the opposing supply and demand zones. Okay, maybe this demand zone coming in here, you take your profit off there. Because sometimes this move is simply a counter trend move. Because most times maybe market is bullish and you saw a route that has been taken, price may use that as a form of what? Retracement to a demand zone where we can continue that move to the upside. So these are the rules. Without wasting time, I'm going to go to the chart now and then show you how it's being. So the first thing, I'm going to use an example here of pounds USD, and this was the news release. Okay, when you look at this created a very sweet area for you to start selling from. Okay, a lot of people will be selling from here. Now, you look at the eye, you go to the 1 hour. This was on the 2nd of November. So you go to 2nd of November. 2nd of November, by what time? That was 7 o'clock. 7 o'clock, 2nd of November, we have FOMC news release. Okay. We have FOMC by 9 o'clock. Okay. So you can see by 7:30. So if you go to 7:30, you are going to have that line here. This is the line. You can see 7:30. So what you need to do is to mark out that level and you label it RILT. Okay. What I'll do, I'll take a ray tool and you mark that level RILT. Okay. So you then wait for price to what? The second is to wait for price to take that RILT. Okay. So let's go back. We wait for price to take that RILT. Now price is in that level. You go to your lower time frame. Look for change of order flow or chop in your lower time frame. So what you need to do is to go to, in this case, I'm going to go to the 5 minutes and start looking for chop. Okay. So you allow this to play. Now we have gotten the chop there. You can see we have a chop here. Market took that level, came back, went up, and then created a change of order flow by having a close of candle below this. Okay, this is the obvious one. Now you have a close. You simply take your short tool, enter at RILT with stop loss. Either you put it here or you put it here, whichever way. Okay, and you aim at the next demand zone here. Okay, so let's see how it plays out. So market move hasn't tapped us in yet, so we have to be patient. Okay, you don't need to FOMO in. That's the worst thing you need to do in trading. FOMO in. Allow price to come to your level because that is the strategy you are trading. So you wait for price to tag us in. Please do not FOMO in. Do not FOMO in. If price doesn't tap you in, now in that case you can see immediately price tap us in on that RILT line. Immediately you can target anywhere for a 1 to 4 hour trade here, or you target this low depending on how you manage your trades. Okay. Then you can see price hit our target very fast and you can come out with a profitable trade. Okay. Now let's look at example number 2. Now in this example also we are looking at different pair. Now the reason why I'm sharing with you different pair is because this strategy works across pair. Either you're trading crypto, forex, indices, stocks, whatever you're trading, if the strategy applies in all as long as you are using pure price action. Now the same day, November 2nd, November 2nd, on Aussie dollar, there was what? FOMC, and this is the I here, and this I you simply label it RILT. Okay. Now, once you get that, second one is to wait for price to tap into that level. Okay, wait for price to get in there. So in this case, we have to be patient. Let's see. Wait for price to sweep. Now, price has swept this level. Okay, what next? You go to a lower time frame, and then you wait for a chop. I like this one because this is a strong demand zone here. That if I want to take a short, I want this demand zone to go. I want this demand zone to go. Okay, because I cannot start trading against this demand zone. So I have to wait for it to go. So you move. Let's play price. Now this demand zone has been taken, and also it has created what? A chop here. Created a chop. So our entry will be at what? At the R.I.L.T. So you take your short tool on the R.I.L.T, stop loss above here. Okay, and then you target the next demand zone, something for an easy 1 to 4 hour trade. So we allow price to move. Now price has stop us in there, and then that is the trade. You simply allow price to move. So what you need to do is to backtest all of this. Before you start applying any strategy, make sure you backtest these guys and let me know your feedback. Okay, I'll see you in this video.